Okay, this next problem is one that we see in real life all the time. And basically, what it is that a taxpayer gets in Michigan, we get a postcard. So they received a refund from the state of Michigan. And so Michigan then sent them a postcard that showed, hey, this is how much money we gave you a refund for. And taxpayers get this postcard and they stick it with their tax info, and then they take it to the tax preparer and they say, hey, I don't know what I'm supposed to do with this. And the tax preparer says, don't worry, I'll figure it out, right? And so what the tax preparer understands and what they'll figure out based on this understanding is something we call the tax benefit rule. So the tax benefit rule says that if in a year, so we'll call it year one, if 1 year we had a deduction, which is a benefit, right? Anytime you subtract on your tax return, that's a big deal, right? You subtract money on your tax return, that's great. But if in the next year you received a refund of that same deduction, then we have what we call a tax benefit. So you subtracted in 1 year, now you're getting the money back in the next year. That money could be taxable. It could be anything from a medical bill that you paid and you got a refund for, or an income tax deduction that you itemized and you got a refund for. So I just said itemized, and you're probably like, I'm not 100% sure what that is. Itemizing on your tax return is something we'll learn in Chapter 5. But basically what it is instead of taking the standard deduction, which we've been doing all along, instead of taking the standard deduction, you instead choose to itemize, which means lists out a ton of personal expenses, everything from medical and dental to income tax, property tax, and even charity. So if you decide to itemize, then we potentially have income. So let's look at the rules. So I listed off the rules, or the questions we're going to ask. I shouldn't say questions, sorry. The things we're going to look at to determine how much, if any, is taxable. But the initial question is to always ask, or you can look at the last tax return. So we either ask or we look at that prior tax return, and we always say, okay, did you itemize? So if they itemized, then we have to go through some additional things. But if they didn't itemize and the only thing we did, or I shouldn't say the only thing, but we took the standard deduction, then we have zero income because you did not itemize. So you take that postcard that they gave you and just put it in a different pile. We don't even have to use it. So again, if they did not itemize, it means they must have used the standard deduction, which we've been practicing so far. And if that's the case, then the answer is 0 for income. Now, if instead the answer is, did you itemize? And their answer is yes, well, now we have to look at some things. So those things we have to look at, I've already wrote out, they're in your textbook as well, but basically what we have to decide is if they did itemize and got a refund, then we have to determine how much is taxable. So there will be a portion that's taxable. Well, I guess there potentially could be nothing, but it'd be mathematically kind of difficult to get to that. But we look at 3 different numbers, we compare 3 different numbers and take the lesser of those numbers, because we are going to tax them, but only on the amount of benefit that they actually received. So that's what these numbers are that we're going to look at. Now, the first one is we look at the amount that they were refunded, the actual amount on that postcard. Okay, pretty simple. The second number, which we aren't given here because we really haven't learned everything we need to learn about itemizing. But it says the next thing we look at is the amount deducted on that Schedule A. And that's because there are limits. So there's a $10,000 limit in Chapter 5, that we'll learn in Chapter 5 for taxes. For medical, we'll learn there's a percentage on the AGI that it's limited. So there's some limitations there, okay? The third thing we're going to look at is the amount that the itemized amount exceeded the standard. So like, how much did they actually benefit by doing itemized versus standard? So if they didn't benefit a lot from it, which we'll see in a minute, we only tax that amount. So, okay, let's look at our couple of examples. That first example is the easiest one. It says letter A, it says they got a refund of $729. And they say the taxpayer did not itemize. And remember, when they did not itemize, which we show here down in, I showed it in red here, it says if they use the standard deduction, they did not itemize, then how much of it is taxable for income? Zero. Nothing is taxable because they itemized, or because they did not itemize, sorry. Okay, now let's look at letter B, which is an example of one that did itemize. So for this one, they get a refund of $591. They itemized $28,500. So let's go through those questions. So again, this is letter B. Yes, they itemized, which is why we're about to go through and decide what of these three numbers is the smallest number, and that is the amount to tax for income. So the first number we look at is how much was refunded. $591 is what was refunded. So that's what we got on the postcard. So that's a pretty easy number to get. Number two, that's the amount deducted on the Schedule A. They did not give it to us. So for this one, let's just put not given, and let's not stress about it. And for number three, it's a pretty easy just mathematical calculation of comparing that itemized total, which we know is $28,500, and we subtract the standard amount, the amount they would have gotten if they would have just chose to do the easy peasy way. It's $27,700. It's given up here. I've highlighted it pink, you can see, got it in the upper corner. And that is something you could either find on the tax return, prior year tax return in that bottom left corner of the 1040, or like it was just given in this problem. So the difference between these two mathematically is $800. And now that we have our three numbers, and technically just two numbers, but we compare these two numbers to determine which one is the lesser, because we only have to pay tax or include it in income and then pay tax on the smaller of the number. So in this case, it's $591. That's thus the least amount. So 591, I put it up here, and we'll just put a little note C below. And that 591 is included on, it's a new form that we're learning. It's called a Schedule 1, and it's line 1. All right, let's look at letter C, our last one. Also a refund of $927. I got to change this color real quick. So $927. And then, yep, they did itemize. They itemized a total of $28,000. So let's look at those questions. So again, we've got to go through these three things because they itemized. And the first question is always, well, what was the amount of the refund? So the amount of the refund in this case was $927. We get that right from the postcard, so we know that. Question two, we don't know, so we'll just put not given. And that third thing we look at, it's pretty easy. We just take the itemized and compare it to, or subtract it from standard. Or subtract standard from itemized, that's what I should say. So we itemized $28,000, a little bit less in this example, and the standard deduction is $27,700. So mathematically, the difference is only $300. So comparing the numbers, we're only going to take the lesser of this, because if they would have just itemized, they would have only gotten a benefit of $300. So I'll highlight those again and write this out like we did before. But the lesser amount is the $300. So that's the amount that I'll include on my Schedule 1, line 1.